Everybody, it's Wednesday, the 27th of May, 2020, and in the midday video today, I said I thought the lows were in for the day, but I certainly didn't expect a bounce to new recovery highs like this. We came down to the prior high as well as the rising 5-day moving average, and from there, the market pretty much exploded higher nonstop right up to daily R2. So over to the daily time frame, we are above this 200-day moving average. The 200-day moving average is flat, maybe slightly declining, but the fact is it is just another level of interest, just like Fibonacci, just like the anchored VWAPs. There's no evidence that the sellers are gaining control. This is why we focus so much on where the market is in relation to and what is the direction of the 5-day moving average. So going forward, we are still innocent till proven guilty. If we break below today's low, then we want to be a little bit more cautious. But again, buyers are in control. They are in the NASDAQ as well. This market broke below the volume weighted average price we thought might end up holding. But also in the midday video, I had said that I think that the worst is over for this market for the day. Now, it did underperform a little bit on a closing basis, but that's to be expected. It's been in a major uptrend. And the fact is, today's low is going to be an important level. It might end up serving as the newest higher low in this primary uptrend that we see with this pattern we've been talking about of higher highs and higher lows, in particular above that rising 20-day moving average. So again, buyers are in control, but we're just a little bit cautious due to the volatility right here at this point. The Russell 2000 closed right at its highs. We were hoping for a continued pullback down into this area so that we could make a lower risk purchase. Of course, the market doesn't care what we want. Instead, it continues to break higher and looks like it's probably magnetized to that 200-day moving average. Semiconductors, nice recovery here as well. I've been saying the last couple days, I think that they're in a range and probably should just be avoided, unless you're very short-term trading. And you can see that we got down to the bottom end of that range and then reversed higher right back up to the high end of what's been the range for this strong group. Biotechs, they have recovered as well. Just an amazing turnaround there. We saw that the volume weighted average price from the beginning of this move was tested, and we came down through that prior band of resistance, but we didn't close below it. So going forward, today's low is going to be very important for the biotechs in terms of measuring strength against this shakeout. It's good to see that not only did it break the 20-day moving average, but it undercut that low slightly. So I think that's really going to make this an important level in terms of where to place stops against over the coming weeks. Financials are the strong group, and they are right up to the year-to-date volume-weighted average price. I had mentioned that in the midday video that we were looking for it to possibly get up to this level, or actually the last couple of days. And there's no sign, nothing here that says it will become resistance. So it's not something that you want to short. We spoke about, just like over here, from this failed breakdown came the fast move higher. Now we have to be aware that you don't want to chase performance to the upside, and you certainly don't want to fight it just because it's at a level of interest. We don't know if a level of interest becomes a level of resistance until after the fact. So we look at the shorter term time frames to see if there is any such evidence that the sellers are gaining control, and the objective answer is no.